Hey guys, how's it going? It's Andy from MagooInvesting. Welcome back. In today's video, we're going to be taking a look back at 2019 as a whole. And the last kind of broader topic I talked about was talking about the top stocks for 2020. And if you missed that, I'll throw that up right here. But in today's video, we're going to be taking a step back and looking at the 5 most disappointing stocks from 2019. And this just isn't based off of the percentage lost. I'm kind of talking about larger companies. Obviously, it'd be really easy for me to sit on the computer, look at all the stocks on the New York Stock Exchange, sort them by worst performing, and just talking about them like that. But today, I'm going to be breaking it down slightly different. I'm going to be talking about the worst or the most disappointing stock from the Dow Jones, the NASDAQ, S&P 500, one of the members that, or something that's owned by Berkshire Hathaway, and then talk about the most disappointing stock from my own portfolio. And so it's not just going to be what did the worst. It's more about how the stock performed compared to the rest of the market and to expectations. When you have these giant, like the Dow Jones, you have 30 massive companies in there. And I'm going to be talking about the most disappointing one from that. The stock market was up almost 25% this year, and being red in a year like this, something had to have gone wrong, and that's what we're going to be talking about today. And before we get started, I'd really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. And let me know what companies you're watching towards the end of the year, and let me know what you thought was the most disappointing stock from 2019. Most likely not going to be talking about your favorite, but I'm going to be talking about my 5 favorite. Before we get started, I got to say that I'm not a licensed financial advisor, and I'd highly recommend talking to professionals, someone that can find you the best places to put your money going forward. And so first up, we're going to be talking about the most disappointing stock from the Dow Jones. So this is the 30 of the largest companies in the Dow Jones. And at first, my assumption was I was going to be talking about Boeing, just based off of the problems that they've had in the past with the 2 major crashes and the inability to get their new 737 MAX planes off the ground. And the most disappointing stock from the Dow Jones is WBA, and that is Walgreens Boots Alliance. And so this is the corner drugstore pharmacy, the second largest in the United States. And since joining the Dow Jones last year, it has been the worst performing stock, down I think around 15% year to date. And so it's kind of been dragging down the Dow Jones overall. And so since it's the most recent addition, I was kind of looking back to see what it replaced, because if there's 30 stocks on it, obviously it probably had to replace some stock. And I was really interested to see that it replaced GE, which was the worst performing stock of last year, down 55%. And since it's left the Dow Jones, it is up 55%. So it's kind of crazy to think about that. Being in the Dow Jones, it fell, and now they've recovered and they're doing great. And now Walgreens is sitting there probably thinking, should we leave? Should we get replaced by someone else? They've had a tough year, but down 15% isn't that horrible. It's just comparing to the rest of the Dow Jones, it is the most underwhelming, considering it's also the newest addition to the 30 stocks. And so overall, Walgreens isn't that horrible of a stock. I've talked about a lot of companies on this channel that you look at and you're like, ooh, I don't want any part of that. And we're going to talk about some towards the end of this video that I would not touch. But Walgreens is not really one of them. They have some good aspects of their company, that they've been around forever. You have, I think you can go back to the 80s looking at their stock chart, and they've been increasing their dividend every year for the past 43 years, which is great to hear. When a stock starts cutting the dividend, that's when you need to start worrying. And they haven't done that yet. Just kind of the main problems is it appears like part of their business, the Boots Alliance part of it, which is based in the UK, appears to be having problems with Brexit, with the uncertainty over there, and just Walgreens as a whole has been having problems. I knew Walgreens as in 2017, I believe they bought up Rite Aid, which was another corner drugstore, and they've kind of merged since then. And Walgreens, there's nothing absolutely horrible with the company. They've just had some problems, and they've been having some problems with their earnings, which has pushed the stock down. And that's what makes it the most disappointing stock in the Dow Jones from this year. Next up, we're going to be talking about the most disappointing stock from the S&P 500. Obviously, there's a lot of companies out there, and this was one that I kind of just sorted by biggest loser and kind of went from there. It was actually a 3-way tie, but the largest of the companies and the most interesting one to talk about, in my opinion, is Macys. And you might think, wow, you've talked about Macys a lot recently. And yes, I have. If you missed that video, I'll put that up right here. But I think Macys is really interesting in the aspect that it's fallen so far. I think it's down almost 45% year to date. That's pretty far. But they have the benefit of it having a 10% dividend because it's fallen so far. And so in the video where I talked about Macys specifically, I talked about some of the problems that they've had. They've been lowering their earnings, their debt has increased, and now you're starting to worry that when the dividend payout reaches around 10% and the cash is lowering, are they going to have to cut the dividend? And if they do that, that'll be a huge hit to the company. In that video, I also talked about potential swing trades that I saw with the company. It's kind of sitting in a very nice horizontal trend right now, and there's a very nice support set at $14, where if I took a position right now, I would cut losses if it fell below 14, and I'd let it ride to the upside. I think Macys has a long way to go before it becomes kind of the giant it was in the past, especially for their stock. But I kind of like the direction they're going, and as long as they don't cut the dividend, I think it's pretty decent overall. They have been lowering their earnings forecast for the upcoming years, and I think once the market kind of understands that they're restructuring, which is something I talk about a lot on this channel, when stocks have been falling, and once they kind of figure out how to be successful in these new markets, I think they're going to be doing great. Problem is, how long that takes, you have no idea. And that's why being down 45% and a 25% up year for the market makes it the most disappointing stock from the S&P 500. Next up, we're going to be talking about the most disappointing stock from the NASDAQ, and that stock is Kraft Heinz, ticker symbol KHC. And so this has been a stock that's kind of been on a free fall as of recently. They've had a lot of major problems. They've removed their CEO. Back in, I believe, maybe February, they had problems with their earnings where they reported earnings and then they were under investigation by the SEC. And it came out that some of the people that were doing the accounting aspects of the company were doing it incorrectly and kind of inflating their numbers. And so the stock fell heavily from that. Also, there's been a lot of talks that many of their companies where I looked at their companies and I was like, man, this is just like a childhood dream. They have stuff like Capri Sun, Lunchables, that type of stuff. But from what I've seen, there's been kind of an effort to push it towards the more organic and healthy options. And based off the numbers I saw there, they've not been super successful there. And the stock has continued to fall. Now I'm starting to hear rumors that they may have to potentially cut the earnings after they already cut it recently and the stock fell from that. And so the stock is not in a great place. And so when I talked at the beginning of the video about Walgreens, talking about how I think that they've had a bad year and I think they'll probably recover. And there are some companies that I wouldn't want to touch. Kraft Heinz is not one of those companies. It's been known as a really good dividend stock in the past, but from its past couple years, it's lowering its dividend and kind of the history it's had and kind of the turmoil that the company's had overall, I wouldn't want to be anywhere near it. And that's why I put it as its most disappointing stock from the NASDAQ this year. Next up, we're going to be talking about the most disappointing stock from Berkshire Hathaway, the crazy product of Warren Buffett. And so going through the list of the companies on there, there's a lot of really successful ones. Apple's had an incredible year. Just kind of going through it and seeing just the scale of how many shares Berkshire Hathaway owns, crazy to look at. But the one that's definitely done the worst has been TEVA, ticker symbol TEVA, which I believe is a pharmaceutical company. And I talked about that in a video a while ago, why I don't buy pharmaceutical companies. And part of the problem with TEVA this year and why it's the most disappointing stock in the Berkshire Hathaway portfolio is the fact that they've caught up in the opioid, basically the opioid crisis that's happening in the United States. And so they have been setting aside lots of money for future court cases. And as a result, they have less cash on hand. And it's kind of the news stories that they're being involved in has pushed the stock down over the year. When you look at the stock chart for the past 180 days, things look pretty good. The stock has started to stabilize a little bit and has been pushing up. But when you kind of scale back a little bit and you look since 2016, you see a long history of decline. And so that's not super attractive. I'd love to know what Warren Buffett saw in this company. Maybe he's just trying to diversify and put in some pharmaceutical companies, but just the track record that I've seen has not been super attractive, and I would not be touching this stock, as I don't touch pharmaceutical companies at all, just because you get caught in these huge battles where pharmaceutical companies, one big news story comes out, one FDA ruling comes out, and you get hurt bad. And that's pretty much what's happened to TEVA in the past year. And so it may not all be doom and gloom with TEVA. From the stuff I've seen, they had rough third quarter earnings, but they have boosted their next year earnings. They're just the forecast for it. And so I think that's why the stock has been doing pretty well recently. But just because they've increased their forecast doesn't mean that something can't come and push it further down. And so with a company that's been hit down since 2016, I kind of be waiting on the sidelines to make sure that things stabilize, wait for this opioid crisis to kind of blow over and so that they can get out of the crosshairs of that, and wait to see what the stock can do in the future. And so when you're in Warren Buffett's stock portfolio and you're down 37% year to date, that's what makes you the most disappointing stock in the Berkshire Hathaway portfolio. And so last and not least, we're going to be talking about the most disappointing stock from 2019 that is currently in my portfolio. I thought about talking about Bitcoin, but when you look at the year it's had, it's been pretty incredible. It went from 3,000 up to 13,000, and now it's sitting around 7,000. So that's a pretty solid year. But today we're going to be talking about Twitter as the most disappointing stock from my portfolio, which would also be my favorite stock from my current portfolio. And so the reason I'm talking about Twitter and not PayPal's had a pretty good year. Starbucks has been pretty good. Twitter is the only one that's kind of had a tough year. And if you take away the last quarter earnings, it would be having a pretty solid year. When you look at other companies in its sector, you look at stuff like Facebook, you look at stuff like Snapchat, they've had great years. And Twitter is up only 5% year to date. And when the stock market's been up 25, 30% this year, it's pretty disappointing. And so I recently read a letter from one of the shareholders that holds thousands of shares, kind of to just the board of Twitter, asking for the removal of CEO Jack Dorsey. And his reasons were the stock has underperformed since it's IPO'd, and with the news that the CEO is potentially moving to Africa for half the year, also to focus on, I believe the article said cryptocurrency, and the other company he's a CEO of, which is Square, which I just learned that. And now I'm kind of thinking less about Twitter because I don't like Square compared to PayPal, but that's a different story. And so there seems to be some kind of conflict of issue type of thing of why would you want to have your CEO for a company that's kind of struggled this year, be living in Africa and kind of away from the hub of one of the companies that he's the CEO for. And so I think the long-term outlook on Twitter is great. The 20% move that it had from its recent earnings were based off of a bug that hopefully is fixed in the future. And so I think that was just kind of the shock value on how bad it missed earnings. And I think when the next earning comes out, things will be just fine. But based off of having just a barely green year and a sector that's done incredibly well this year, that makes it the most disappointing stock in social media, just as a sector, also in my stock portfolio currently. So let me know what you thought about my list of the top 5 most disappointing stocks in 2019. But you kind of have to throw an asterisk on there. I talked about one from the NASDAQ, S&P, Dow Jones, from the Berkshire Hathaway portfolio, and then one from my own portfolio. Because I didn't think it'd be that fun to go and talk about stocks that have just had the biggest loss from this year. Because that's just kind of, you're going to see a lot of pharmaceutical companies on there, and that's not as fun to talk about. But some of these stocks I talked about, I think have decent upside. Macys, Twitter, Walgreens. But the other two, the pharmaceutical company TEVA and Kraft Heinz, I don't think have a future right now. I think it's going to be interesting to kind of watch to see if they can recover, but I would not be going anywhere near them. And thanks for watching this episode. I had to do a decent amount of research for this video because some of these companies I don't know a lot about. Some of them, like Macys and Twitter, obviously I know a lot about, but the other ones I had to do a little more research. So really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. And I'll see you in the next video. Thanks for watching.